Hi, everyone. It's great to be here. My first one-to-one conference, so thank you for the invitation. This is going to be a gold briefing, and we're going to talk about the current dynamics of gold and future mine supply, which is obviously a critical issue. This is what we're going to talk about. What is the outlook basically for gold and silver in 2023? We're going to talk about gold's price behavior and the causes of those price moves, global gold demand, gold versus gold stocks, the size of the gold and silver equity markets. That's pretty interesting. Pardon me, how miners are going to address the increasing resource shortage. That's an important topic. What low mining revenues signal, and the companies I think are most likely to capitalize on these trends. First, what's gold's price behavior and causes? So this is an interesting chart. So what I basically did was have my Excel person just basically outline, a line chart of the gold price, and green meaning it's rising, red it's falling. But why did it rise? Why did it fall? So you can see it popped up there in early 22, and then for the bulk of last year, it was down. So why was it down? You can see because we had a rising U.S. dollar, we had a hawkish Fed. That's not really surprising to anyone, but you can see what it did to the gold price. And then in Q4 of last year, we had a very nice pop. In fact, gold ended the year basically flat. And why was that? Well, we had a falling U.S. dollar, a more dovish Fed, and probably some short covering in there as well. And then the Fed got more hawkish and the gold price fell. And then we had the SVB crisis and the gold price rose. So you can see how it played out and why it played out. Okay, so what does global gold demand look like? So the first thing to look at is central bank buying. And I think many in this audience would know central bank gold buying last year was the highest ever recorded in history on record. And you can see that in the chart on the right there. Global gold buying was far higher by central banks last year than any year in recorded history. Ooh, I didn't even touch it. What is total global gold demand? And you can see there, this is annualized gold demand globally, each bar. And you can see what it did last year. Last year, global gold demand from all sources matched what it was in 2011. So it's very interesting that gold demand is rising so much compared to other years. Okay, let's talk about gold versus gold stocks. I was asked to talk about this as well. This is an interesting chart. So the gold price is in gold, gold stocks in green, and I'm using the GDX there. So you can see last year, gold was basically flat. It was down most of the year, so gold stocks really suffered, as I think a lot of us know, and it ended the year basically down 10%. And then what is it year to date? And this chart is actually through last Friday. So gold's up 9.1% as of last Friday, and gold stocks are up 10.1%. Okay, what have they done in the past? What have gold stocks done in the past when gold has really had a big spike? And you can see there in 2020, we had the COVID crash, right? And then we had the COVID bounce. During the COVID bounce, gold rose actually 40% in 5 months in 2020. And what did gold stocks do? GDX rose 125%. So the leverage that gold stocks provided to gold was clearly in place. And then in 2016, the right set of bars, gold rose 30% in 7 months in 2016. What did gold stocks do? GDX was 133%. And so when gold really goes on a run, not 5 or 10%, but really spikes and really advances, especially in a short period of time, we do see gold stocks respond. Okay, so how small are the gold and silver equity markets? Not the gold market itself, but just the equity markets. And this chart is from Marin Gattuso, as you can see there. The gold stocks are the small gold bar on the left. That is the entire gold mining industry. And you can see how that compares to other industries and just how small the gold equity market really is. Okay, how small is the silver market? And this is really interesting. This is the cash levels, not the market cap, the cash levels of some popular companies. You can see Google there, Microsoft, Amazon, Apple. Those are their cash levels as of Q4 of last year, okay? The silver market, the entire silver equity market cap, not their cash, their market cap is represented by the silver market, silver stocks bar there you can see on the right. So basically, it's roughly the size of the amount of cash that Tesla had on its books in Q4. So this is not even an apples to apples comparison, right? If it was apples to apples, we would compare the market cap of these companies to the market cap of the silver market. This is just their cash levels. So yes, these companies could buy the entire silver equity market, the producers, with just their cash, and have cash left over. It would almost be a rounding error for Google or Microsoft or whatever. Now, they're not going to buy the silver market, but I'm just saying this shows just how small it is. So the gold and silver equity markets are so small that it takes very little cash coming into them to really impact their prices, which can work in our favor when sentiment turns. Okay, here's another great chart I love to show. This is the silver S&P 500 ratio. So this is silver's ratio to the S&P 500. You can see the big spike in 2011. And there we are in the far right where we are now. You can see it just hasn't risen at all. Even with a little bump in the silver price, relative to the S&P 500, the silver price itself is dramatically undervalued. So even if you say, okay, take out 1980, that's fine. Even to go back to 2011, there would have to be a 5.5x move between the silver price and the S&P 500. A combination of those two things would have to happen just to match the 2011 price or ratio, excuse me. Okay, on to the great resource replacement. How are miners going to address it? This is a real issue. So first, here's a quote from Bloomberg, and this is a journalistic report. This is not necessarily from an analyst, but even outside journalists are noticing this trend. Newmont and other major miners are struggling to maintain at least a flat production profile, and even that seems out of reach, which continues to put pressure on the major gold miners to accomplish growth through acquisition. They're going to have to acquire in order to maintain their growth. So to give you an idea of just what we're talking about, here's a question. If each of the following companies added 3 million ounces of gold per year, how much do they grow? So let's say they're drilling and they make more discoveries and prove up some more resources, grow their reserves, 3 million ounces a year. How much do they grow? Agnico, Barrick, and Newmont. How much do they grow? None would grow. They would lose ground. Agnico Eagle produced 3.1 million ounces last year. So even if they find 3 million ounces a year in reserves, they lose ground. Barrick produced 4.1 million ounces a year. Finding 3 million ounces a year doesn't do the trick. They would lose over 1 million ounces a year. Newmont, 5.7 million ounces last year they produced. Finding 3 million ounces doesn't move the needle for them. It's almost even half of what they produced last year. Okay, so this is an interesting slide. This is from Tavi Costa at Crescott. So let me read this while you look at the chart there. Why is mining revenue stalled when gold prices are near record levels? That's a very good question, right? Gold miners have not been able to increase their revenue while the metal price remains near all-time highs. In short, this is mainly a function of declining industry-wide production, a key part of the macro investment case for gold. The large and mid-tier mining companies have underinvested in exploration as well as M&A. So both the quantity and the quality of the reserves have deteriorated over the last decade. So this directly implies that acquisition, M&A, is going to happen in our sector just for the mid-tier and majors to survive. to maintain their levels, let alone grow. Okay, so let's talk about which miners are most likely to add ounces this year, either through discovery, resource expansion. This is a key part of stock picking, is who's going to add ounces. Or number two, become a takeout target to help producers replace ounces. Takeout targets, they're not going to necessarily happen overnight, but there's going to have to be M&A in the industry. Or participate most in the next gold and silver upcycle. And so what I did was pull this chart out of my book, Pay Dirt. And this basically shows what gold and silver and some stocks did during the run in 2016. So there you can see at the top, gold was up 30%, silver was up 52%. I can't quite see. And then the top half of that chart is basically how some gold and silver producers performed during that short run. And you can see the average there in the middle bar. They outperformed dramatically the gold and silver price. And then the bottom half of that chart is companies that were not producers. This is the junior exploration companies. You can see how they performed in that short time period, and there's their average at the bottom. So they're basically outperforming the gold and silver price by 5x or more. So the leverage we can get from miners is still in place. Historically, it's still there. I have many examples in the book of this very thing. In fact, there were so many I devoted a whole chapter to, and the publisher's like, enough, Jeff, stop, So I had to actually cut off all the examples of this. So there's plenty of examples through history where miners are going to show they have leverage to the gold and silver price. Okay, so who are those? So who do I like? So these are companies that I like that are here at the conference. First is American Pacific Mining. What is attractive right out of the gate about American Pacific is they're going to have $30 million spent just this year by partners. Two partners are going to spend that much in exploration drilling 2 projects. Palmer is the VMS in Alaska, the Madison Copper Project in Colorado, and these are major partners, Rio Tinto, Dow. They're going to be spending that much money just this year exploring those projects. There's going to be a lot of progress, a lot of news coming, especially this summer, this fall, from those 2 projects. American Pacific also owns 100% of 2 other projects they're going to drill on their own this year. Tuscarora is a gold-silver brownfields project in Nevada. A past drill result hit 368 grams per ton gold. That is not a misprint. Gooseberry is also in Nevada, a silver gold brownfield project. There's assays pending on that right now. So there's going to be a lot of news on that company. So the timing is good on this. Institutions own 14%. Michael Gentile, if you know that name, hedge fund manager who basically retired to run his own fund. He owns 7% of the company. So he's obviously very bullish on it. P2 Gold, I really like this company. What attracted me to it, Pretium 2, basically these guys were involved in Pretium. They were very successful, started this new company, and they've been putting literally millions and millions of dollars of their own money into their own stock. So they've got a lot at stake here. They own almost a quarter of the shares. First is BAM in BC. I've actually been up there. I did a report on that site visit. You can read it on the website. There is a gold discovery in hand. Basically, the question there is, how big is this thing? They're going to do 12 to 14,000 meters of drilling this summer. They're targeting feeder zones. And the question there, they think, is there a porphyry system at depth? So that would be a game changer right there if they hit that. There'll be an updated resource there later this year. Gabs in Nevada, I'll probably be at that project this summer. It's a gold copper project. Again, there's a resource there. How big is it? But they're basically pushing this forward. There's going to be a PEA this summer, drilling and network, feasibility study, permitting. All that's going to happen here over the next 12 months or so. Also, there could be a porphyry system at depth there as well. Not too many shares outstanding. They've got enough cash to get started. What I really like about this is it doesn't even have a $20 million market cap, and nobody's looking at it. Nobody's talking about this one. I love it. So very, very cheap. Scotty Resources. What I like about Scotty at first was I read about Brad Rourke, the CEO. He invested in Athabasca Oil Sands at 10 cents and took the company public at $18. So I'll let you do the math on what kind of return that was. So obviously this is someone who's been very successful. Basically, he saw an opportunity to provide better shareholder value. He took control of the company via hostile takeover, bought out management, and immediately grew the property from 400 hectares to over 59,000. This is a very big deposit. It's a strong brownfields property. 7 past producing mines have been here. It borders Newcrest Mining and Ascot Resources. The strike is already big, 1,400 meters long, 390 meters deep, and importantly, it's still open at depth, both at depth and at length on surface. My theme, what I've called this stock is the flagship project is shaping up into a significant gold discovery. How this came about for me was I was watching Scotty. They put out high-grade gold results. Hey, that's great. And then the next report, high-grade gold results. Then the next report, high-grade gold results. I'm like, I got to talk to this company. We invited them to the site, and the next press release was high-grade gold results. The next one, high-grade gold result. I call them the Energizer Bunny because they just kept producing high-grade gold results. This is going to be a major asset. This is in the works. It's going to work. It's going to happen. Yamana Gold, now Pan American, owns 7%. Eric Sprott owns 11%. US Global owns some. Many newsletter writers, including myself, recommend the stock. So there's strong support for the company here. Drill results are still coming. This is a strong buy, in my opinion. Silver Hammer is here. I also like them. They have a new CEO in place, so we can expect the company to get a lot more aggressive this year. That's the thing we're going to see. They just had a press release out the other day. There are 3 brownfield projects here. None have had any modern exploration whatsoever. First is Silver Strand in Idaho. They're doing geophysics, mapping, structural interpretation. See, I don't have to read all this, but basically all this work is going to work toward a drill program later this year. Eliza Silver in Nevada, same thing, a lot of exploration work, ultimately to lead to prepping for a drill program. Silverton in Nevada, they're finalizing drill targets right now, permitted. They're going to start drilling on existing 12 drill pads now. So the theme I have for them is very interesting because they mentioned maybe some M&A. And then the new CEO came on board. I talked to him. He mentioned M&A. The last press release mentioned M&A. In the last press release, they said, we are reviewing new accretive opportunities in Western USA and Canada. This is a small company. They've already got 3 strong projects, so adding more could be very interesting. Maybe it'll be land near Silver Strand in Idaho. That would be very interesting because that's very prospective, not been fully explored. You can see the shares outstanding there, very low, $8.5 million market cap as of Friday. That's ridiculously low. I mean, any meaningful success here, and this thing will really pop. There's some others I like that are not focused just on gold and silver. First, if you like lithium, I really like Brunswick Exploration. Full disclosure, I did invest in the private placement late last year on the stock. Lithium Explorer, they've staked numerous claims of unexplored pegmatite fields in Quebec and Atlantic Canada. That's how they've been spending their money, basically, is building all this land package. Then they'll start drilling. Excuse me. Second would be fission uranium. They just talked here, developing a high-grade uranium project in Athabasca. Strong team, feasibility in place. The issue with fission, the case with them is very simple. High grade, at surface, in the Athabasca, a lot of permits in place with a feasibility study, that's going to be a mine. So that's a good buy for that reason. If you like royalty plays, hey, Royal Gold and Franco-Nevada and Sandstorm and Wheaton, although those are great companies. But if you want something that's going to grow a little faster, that's a little younger, EMX Royalties is a good one to look at. They already have a large portfolio. 5 are in production, 9 are in development. They're going to go from losing money last year to generating over $30 million by year end. EMX is a strong buy for me. So a lot of people will say, well, I'm not going to buy copper and lithium and all that because those are going to struggle in a recession or a market downturn or something like that, right? Well, compare that to company progress, what they're doing and the progress that they can make. A good example is Snowline Gold last year. That was in our portfolio. It went 10x last year while the gold price was falling and juniors were falling by 50 to 75%, right? But that rose because they made a major gold discovery in that market environment with the stock market was falling, fears of recession, gold and silver price falling, yet they still advanced in a big way. So you want to compare, look at maybe a recession is coming. A recession probably is coming. But compare that to what is this company doing that could generate a lot of strong development progress that's going to move its stock. And just to wrap up, I'm at thegoldadvisor.com. It's basically a free due diligence portal. I started it to basically help investors who want to get newsletter quality analysis on companies that I cover. There's 19 companies in the portfolio right now, but it's for free. So it's the sponsorship model instead of the subscription model, because I wanted to offer it for free for people. So those are the people that are, the companies that are in it. And then I just published a book, Pay Dirt. You can see on the right there, Mining for Profits with Gold and Silver Stocks. It was a lot of fun to write. It was a lot of work to write. It took 2.5 years off and on. But it's great. It's very useful. And I did something a little different. In addition to the strategy that I share on how to pick mining stocks, I invited 16 people from the industry to contribute to it. So there's 16 experts in the book who are also contributing at various points throughout the book. There's over hundreds of quotes from 16 people in the book that are providing additional input into how to pick mining stocks and what to look for. And the interesting thing I learned is when I interviewed them all last summer was just how specific they were. They were very specific on what to look for. They didn't give general guidance. They weren't vague. They didn't say, you might want to try this. No, they were very clear. Look for this. It's got to be this. Look for that. If you see this, don't buy the stock. Very clear. The stock will tell you, the book, will tell you exactly what to look for and how to pick mining stocks. You can see more at thegoldadvisor.com/paydirt. There's videos there, sample chapter, the most terrifying mine I ever entered. So if you are claustrophobic, I will warn you about that chapter ahead of time. So, so that's it. So thanks again for inviting me, and I hope you find this all useful. Thank you.